Hi there, welcome to Kneppy Invest and welcome to September 11, 2024. Just can't believe it's been 23 years. Though that September 11, 2001 is still ingrained into my memory. Living in the United States at the time, I can remember what I was doing that day, not quite minute by minute, but definitely I still have vivid memories of that day and what I was doing during that particular fateful day in 2001. I just can't believe it's 23 years ago. Starting to feel a little bit old when I'm now working with people who were not even born on September 11, 2001. So one of those dates that will always have significance for me, and I think will have significance for a lot of people out there. Anyway, let's move on to the ASX today. An interesting day on the markets. Some unusual things have happened. For instance, the NASDAQ was up overnight by almost 1%, but the All Tech down 1.62%. Not sure what's happening to that. We'll have a look in a second or so. Mining's had a good day. Resource up 1.01. Not surprising. In fact, just after the market opened, I had a look at the best performing companies, and it was just full of lithium companies and MinRes. Well, I suppose MinRes is a quasi-lithium company. They're a little bit more diversified than just lithium, but they've had a good day. I saw Pilbara Minerals was up about 15%. So a lot of lithium companies, I no doubt, will be in the best performing companies of the day when we have a look at that. And that is what I'm going to do in a second. So the agenda for today's video, we'll go through the best and worst performing sectors, indices, and companies. Then we'll go through the top 5 stocks of the day. Also talk about 2 other companies that I do own that didn't make it into top 5. And I just thought I'd talk about these 2 companies because a few interesting things are happening with these companies. And then after the top 5 stocks and these 2 companies, not sure what I'm going to do. Depending on time, if I have enough time, I might go through some of your comments. I might have a look at the charts if any charts or any companies pop up, but I have no charts planned right now. Okay, so let's get to the ASX today. And the first thing we'll do is have a look at the indices. Funnily enough, the XAO were actually opened higher for the day, and they've been drifting lower through the days. That is also true with the XTX. Not sure what's happening there. We'll have a look in a second as we go through the different sectors. So materials had a good day, mining. Real estate's had an okay day. Utilities is also up. Then IT down 1.92%. Not surprised that energy is actually down. We'll have a look at energy because oil has been falling. So I would assume that one of the reasons why energy down is because of Woodside and Santos are down pretty big. Now let's have a look at IT. Now I do know REA's attempted acquisition of some company, was it in the UK or somewhere, has been rejected. Maybe that's what's been caused the IT to go down today. Let's have a look by market cap. NextDC, of course, NextDC. Stupid me. In fact, NextDC is in my top 5 stocks today, doing a capital raising. Usually I don't talk about capital raisings, but share price of NextDC is down 6.81%. And what else is here? In fact, REA Group's not even in the IT list here. Well, I think that's weird. So I'm assuming REA Group's in the real estate. That's odd. For me, that is odd. I wouldn't consider REA Group real estate. Let's have a look. Let's confirm that. Yeah. No, it's not there either. Goodman Group is up. They had an upgrade or something. And where is REA Group? If it's not in IT, it's not in real estate, where the hell is it? Is it in industrials? You know what I could do? I'll just have a look at REA Group, which I'll do right now. REA, got to spell it right. Communication services. Okay, fine. Whatever. All right, let's have a look at energy. I'm assuming I did see an article somewhere where they said that in this article, yes, I'm just babbling on right now. They did mention that oil is at a 3-year low. So I'm assuming we have seen a little bit of weakness in some of the oil companies. Now, someone will say that Woodside is natural gas or more natural gas than oil, whatever. But let's have a look. You're there. Woodside down 2.42%. Santos down. A bit of weakness in coal as well. A little bit of positivity in uranium. Looks like Paladin is up. Boss Energy is up, TPLO is up, NextGen Energy is up. Someone did mention I don't look at NextGen. That should be in my lithium, but it's not. It's in another, I think it's in my energy, what do you call it, a watch list. But anyway, so the main weakness within energy is oil, natural gas, and also coal. So let's move on to the indices. Gold's had a pretty good day, up 1.15%. Otherwise, we see a lot of reds here. So let's have a look at the ASX 20. And keep in mind, financials is down a fair bit as well. So I would assume the banks are down, energy's down. Not sure what's happening with iron ore. ASX 20 is down by 0.6%, which is performing worse than the All Ords in the XGO and small caps. So this is a day to be in the small caps. One of those rare days where the small caps have done better than the ASX 20. It's really interesting. I was listening to a podcast. I think it was Stephen Mayne and Alan Kohler, and I think it was Stephen Mayne, and he said he just implied that the ASX 200 is the better companies, consists of the best companies on the ASX. I actually completely disagree with that. Many of the best companies on the ASX are outside the 200, and just because a company is big doesn't mean it's better. I just wish Rudy would understand that. He just thinks implicitly the bigger the company is, the better it is. It's actually not true. This is my opinion. It's not true. There's a lot of really good companies out there that are fairly small, and they're growing. That's how a lot of people make their money, buying small cap companies that can grow for decades. Anyway, 14 companies down, 6 up in the ASX 20. And I'm assuming we have the REA Group, there's Woodside, CBA down a fair bit, and yeah, there's the banks. All the banks there, including Macquarie. WiseTech is down. Not sure why. NASDAQ up. WiseTech should be up. Who knows what's happening there? The best performing companies, we have Fortescue. So it looks like iron ore's had a pretty good day because Fortescue's up, BHP's up, and Rio Tinto. And thank God for that, because that means the ASX 20 is not down by a fair bit. Because if those companies were, or if iron ore was down, I think the market might have had a little bit of a more bad day, a worse day. Okay, so let's get to the best and worst performing companies in the ASX or on the ASX today. We'll start off with the top gainers. And a company called Petratherm is the best performing company by percentage change, up 85%. This is another one of those companies I have never heard of. Now, all the companies below Petratherm, I actually have heard of, apart from Far Northern Resources, 5.44 million. Not sure if I've heard of Scorpion Minerals, but all these other ones, yes, definitely heard of. Definitely heard of Mineral Resources. They're up 17.27%. Market cap $7 billion, which is a little bit different. The market cap of the best performing company, which is Petratherm, has a market cap of $8 million. That's a definition of a small company. So let's have a look at Petratherm. I would say it's got basic mineral or material, so we know they're probably a mining exploring company. I want to say oil just because of the Petra. Therm has me thinking, I don't have no idea. Copper and critical minerals explorer focus on the discovery of deposits in both frontier and mature mineral provinces. There you go. Completely wrong. I just thought Petra might mean petrol. There's probably a Latin word for that. I have no idea. Just making things up as I go along. Oh, there we go. Lithium stock surge as Chinese giant suspends major mine. Oh, that's a little bit of a different take than a few other articles I have seen. Okay, so here is why Petratherm is up today. High grade titanium, rich heavy mineral sands at Kneppy. Ooh, I'm going to open this up. Where is Kneppy? I'm assuming West Australia. Let's have a look. Titanium, interesting. It's on the critical minerals list for Australia, US, and EU. Has uses in electric vehicles, battery storage, wind technology, pigments, and as an alloy in steel and super alloys. I just want to know where this Kneppy is located in. South Australia. There we are. Kneppy. I just like the name. Kneppy. Brilliant name. Brilliant name. Aborigines have a lot of good names, don't they? I just love the Aboriginal languages. It's just the names they have. And that's another one, Kneppy. We'll have a look at this particular article from Market Index later in the video where we talk about Pilbara Minerals. Okay, so Petratherm. I'm going to have a look at the chart for this one. I assume the chart looks pretty bad. So PTR, we'll get There we go. We'll have a look. Petratherm. I'm also going to get rid of my screener. There we go. Decrease my video. A fairly typical chart for mining exploring companies, I have to say, to be honest with you. A lot of times you will see mining exploring companies in downtrends, and then they release a really good announcement and it pops up. So this is fairly similar. You probably see this pattern a lot. I would not be buying on this. I don't think would consider this a breakout just yet. And we have seen a little bit of selling today. Share price has been as high as 4.5 cents. Now it's 3.7 cents. But the volume. Now, even if we see the share price drift lower, maybe go sideways, if the company releases another really good announcement, that could be the catalyst for a breakout when it comes to Petratherm. So what I'm going to do is put this onto my high volume spec because it's massive volume coming in today. Congratulations, Petratherm, and congratulations to shareholders who may have bought in the last few months and now are up 75, 85%. We have mineral resources there. I'm probably some of these might have released. Let's have a look at May. Why not? May. Melbana Energy up 63%. Block 9, Amistad. Not a bad movie, by the way. Bad movie. Steven Spielberg, Anthony Hopkins, about the Amistad ship and slavery and that sort of thing. What defines someone being free or something like that. Anyway, pretty good movie. Back 1997. Was it that late? Was that long ago? Look at that, 1997. Spanish land ship La Amistad. No, not a bad movie. And I'm pretty sure the lawyer in that, Anthony Hopkins, I'm pretty sure he was John Adams II. The second John Adams. There was two John Adams presidents. John Adams, I'm going to go back to Amistad. I'm sorry, and I'm pretty sure the John Adams, the second one. There's the second president was John Adams, and then his son became president as well. John Quincy Adams, that was his name. Yeah. So the lawyer in Amistad is John Quincy Adams, who was the sixth president of the United States. There we go. Anyway, let's move on to Melbana. Block 9, Amistad, field development approved. The market likes this. Not the sort of announcement that would probably draw me in, but there you go. The market likes it. That's the main thing. Let's have a look at the chart for Melbana Energy. And this is, again, another chart that's in a downtrend. Announcement. The market likes it, but I would not be interested in this particular chart. I'm going to put this into my high volume spec. I'm looking for patterns, successful patterns. And I'll go through all these charts in the future, see which patterns play out time and time again, see if there is a pattern for these type of announcements. Anyway, it may be Xreality Group. Let's have a look at Xreality Group. Yeah, let's do it. I have a feeling this company did release an announcement. Share price up 21.62%. This probably deserves to be in my top 5 stocks all day. $5.6 million contract awarded for the US Department of Defense project. A nice announcement from Xreality. I don't think this company is yet profitable or generating cash flow in the business. I'm not sure what sort of margins there are in this particular contract because it's the US Department of Defense, and I would assume you're not going to get through any good margins. I would say also maybe one of the reasons why Xreality wanted this particular contract for this project is just to get in bed, not that sort of bed, but get into bed with or develop a relationship with the US Department of Defense. That could be one of the reasons why. In fact, I mentioned here, the contract represents or presents opportunities for follow-on work. And I think this is a strategic potentially strategic partnership for Xreality, getting into a relationship with the US Department of Defense, because we know the US Department of Defense is going to spend like crazy. They always spend like crazy. Yeah. Not sure what this is about, but immersive training systems. Well, there we go. First sale of operator XR's immersive training systems. Interesting announcement. I really think this announcement might or should have gotten Xreality Group into the top 5 stocks of the day. I apologize, Xreality Group. I should have taken this particular announcement a little bit more seriously. And the chart. Oh, this is another interesting one. A bit of selling has come in today. Share price went to a high of 6.7 cents. Now it's 4.5 cents. A lot of selling has come in. This is not the best looking candlestick. But In fact, if the share price remained above 6 cents, I'd be way more interested in this. But we have seen a bit of selling. Share price has pulled back into this sort of resistance zone. So there will be a little bit of resistance here. And those who bought at higher prices today, they are now resistance. A lot of those might be day traders, and they'll probably want to be getting out in the next few days, if not today, for a loss. So Xreality Group. Anyway, we have core lithium. I have a feeling that's going to be a common theme when we look at the companies by markup. Yeah, there we go. A few other lithium companies here: Land Resources, Gallon Lithium. There's Pilbara Minerals, Arcadium Lithium. So we can definitely see a lithium theme as we go down that list. Now let's have a look by market cap. We have Pilbara Minerals. Yeah, this is just lithium. Lithium and other stuff. Lithium. Adriatic Metals is silver. Chalice Mining, is that gold? Arafura rare earths. Vonex, isn't that sort of in lithium space, that sort of area? Yes, a lot of lithium and that sort of thing. There's core lithium as well. PointsBet's had another good day. Burgundy Diamond Mines. Okay, so let's get to the top losers of the day. And I expect one company to be in this list. And in fact, that's there. NextEd Group down at 23.3%. And the company that has come in number 4 in my top 5 stocks today, Proteomics International, down 17.2%. So we don't have to look at that company, but NextEd Group did release, and I'm not that interested in these type of companies. For some reason, I just don't like education companies. I think, and this is just my thinking, it has something to do with regulations, government regulations. These companies can just exist on government regulations, and if government regulations improve, they could do well. But if government regulations, when it comes to education and say international students, that could change significantly, and that could really harm these type of companies. Anyway, so NextEd Group is down 23% on proposed international student commencement limits from 2025. So obviously there was something in that the market hasn't liked, and the federal government proposes to introduce an annual national planning level to establish an overall limit on the total number of new international students commencements into vocational in higher education. 175,000 to higher education, 95,000 to vocational. Subject to the passage of an Education Services for Overseas Students Amendment Bill 2024. I wonder if this has something to do with housing and that sort of thing. And they think this is going to fix it, which it won't. Yeah, anyway, so that's not the problem. Anyway, so NextEd is down at 23.3%. And let's have a look at the chart. In fact, the chart looks pretty ugly. There was a nice little run last week or 2 weeks ago. In fact, on the 29th of August, share price of this company rose 50%. That was not a breakout. So if you zoom in, yeah, it was just a nice volume, but this is not, that for me is not a breakout, because the share price has been in downtrend for a long time, a lot of resistance, and any sort of positive announcement will be met with a flood of selling. A flood of selling, when you've seen that today. So I hate these sort of charts. I would be really patient before I would even think about buying some shares in this company, unless I thought this was a high quality company that was really good value, which I would be dubious about. If anyone claimed that, I would probably have to pull back, push back, not pull back, push back. I do get confused sometimes with push and pull. Now, an ugly little chart for NextEd. And I'll talk about Proteomics later. Anything else of interest here? EZZ down. It's been going on a tear lately. So not surprised to see it down today. Profit taking. In fact, I was thinking of taking profits today on open. In fact, it's down to where it started yesterday. So yeah, this is what can happen with these type of companies. A little bit of selling can force a bit of profit taking, lock in those profits, and the share price of EZZ is now around about $3. Who knows? The share price could fall to $2.50. Wouldn't be surprised to see that. Even to $2.50 to $2.30. Would not be surprised, because a bit of selling, bit of fear, that sort of thing can drive the share price down. Verus, what does Verus do? I think they're, I have no idea. Adairs, I'll have a look at Adairs in a second. So let's have a look by market cap. NextDC, we'll talk about NextDC in a second. And there's Adairs. I'm wondering if Adairs has gone ex-dividend. I don't remember any announcement from this company. Ooh, there you go. The reason I don't remember any announcement from the company, because they did release an announcement about the resignation of non-executive director. That was marked non-market sensitive. So I completely missed that. I don't know why that would lead to the share price dropping 10.5%. Let's have a look at the dividend. And they've gone ex-dividend, 7 cents, but the share price is down by 19 cents. So hopefully people aren't selling this because it's just ex-dividend, because your capital loss is significantly greater than the dividend, which is absolutely ridiculous. You actually lost money on this. I wouldn't be surprised that's what's happening. Oh, it's a nice dividend, but as soon as it goes ex-dividend, I'm going to sell. You've lost money. It doesn't matter. You got this money coming in. You've lost money. You could have sold yesterday and got a higher amount of money coming your way. If that's what happens, it's just ridiculous. If that is what happened, but maybe this non-executive director resigning is what's caused a bit of a panic. The chart's starting to look pretty ugly for Adairs. Drops below $1.60. That would be below that previous low we saw in June. So it's starting to look a little bit more ugly for Adairs. Anything else on this list? Seven West Media, no interest. Finbar was looking interesting not that long ago. The chart was in a nice uptrend. I think they did a capital raising or something. And something's happened today. What has happened today with Finbar? Friday. Oh, they've gone ex-dividend. This is another one. It's gone ex-dividend, 8 cents, and share price is down by a lot more. Maybe it has something to do with franking credits. A nice dividend yield, but again, yeah. So it's just gone ex-dividend. But before that, even today, it's a nice looking chart. And I would also want to mention, I've seen this a few times. I'll just show you one company, Shape Australia. So I do own Shape Australia. And on the 29th of February, the company makes ex-dividend. And on that day, the share price dropped from about $1.90 down to $1.70. I don't remember the dividend being that big. Let's have a look. So the 29th of February, but we don't know what it is. They don't have the date here. So it would have been about, oh, there we go, 29th of February, there it is, a dividend of 8 cents. Yet on this particular day, the share price of Shape Australia fell to 23 cents. What? But then look what happened to the share price after. You would have been much better off just maintaining your shares in this company, not just taking the dividend and selling. Sometimes I don't understand income investors, particularly when they just sell because they've got a dividend. Particularly if the share price has fallen by a greater amount than the dividend. You're not making money, you're actually losing money. Yeah, dividends aren't free, people. Dividends are not free. You do have to pay for it, and the payment is the capital. Your capital falls. Anyway, let's move on. Yeah, nothing else here. Frontier Digital Ventures looks pretty ugly. Okay, so let's move to the top 5 stocks of the day. Actually, before we move to or talk about the top 5 stocks of the day, the 2 companies I just want to talk about that I do own. The first one is Swoop. This is really interesting. I find this fascinating. Share price is down a little bit, but share price is all over the place. So last week, I think it was last week, Swoop put in an acquisition proposal to acquire 100% of a company called Vonex. There was another takeover bid for Vonex, and Swoop said their bid was superior, but Vonex says, no, you're not. You really haven't given us any information, so we can't really say. Today, Swoop announced they have acquired 17% stake in Vonex, and they also mentioned, which I find fascinating, and I find this just intriguing. So there's these 2 takeover bids for Vonex, and Swoop have come in, bought 17%, and I have no doubt the whole reason they bought this 17% is to stop this other takeover bid from being accepted. In fact, they sort of mentioned that. Swoop, right down here. In fact, it's underlined. So they also want to make it clear for everyone. Swoop does not support the Max Hotel scheme and currently does not intend to vote its Vonex stake in favor of it. I wonder if this is a really good play from Swoop. Fascinating play. Yeah, I just find it intriguing. And what's Vonex going to do? So that's Swoop. In fact, Swoop's chart is starting to look better. By the way, I am a shareholder of this company, and this is a strategic longer-term play because I think the share price is or has found a bottom. Now, I got it a little bit early, probably. I could have waited a little bit of time, but I do think the share price or the chart is starting to look really interesting. And I wouldn't be surprised if the share price of this company breaks out sooner rather than later. If you look at Vonex, the share price of this company has dropped a lot. By the way, that 17% stake in Vonex by Swoop is like $2 million. It's not much at all because Vonex is not a big company. This is another company, share price in a long-term downtrend. And I have no doubt this takeover bid is just an opportunistic one for a company that's probably or should be valued a little bit greater amount than what Vonex is right now. And to be honest with you, Vonex management should say, get lost. You're completely undervaluing this company. That's what they should say, but, you know, it's not me to say that. That's Swoop, which I do own. Vonex, which I don't own. The other company I want to talk about, this is a company I own. This is just a value play. And it's Brookside Energy down 10%. So I bought some shares at 1.2 cents and 1 cent. I refuse to buy shares in a company when they fall below 1 cent. And I've been wanting Brookside Energy to do a capitalization. They have something like 4.5 billion shares on issue. And right now, the problem with the share price, and the reason the share price can't go any higher, is because of pip trading. So we have buyers and sellers just trading 1.1 cent up, 0.1 cent down. We're just seeing that time and time again. That's why the share price can't move up. That's why this company could be one of the cheapest companies on the ASX, because where the share price is, you're just not seeing any movement in the share price upwards. In fact, if you go to Hot Copper, just so much negativity about this company and its management, just because the share price is not moving. But if you look at the valuation of the company, then you see some value, particularly if they achieve their goals, which is a question in itself. But if they achieve their goals over the next 3 years, this could be the cheapest company on the ASX. So just that alone, I'm going to buy some shares. Now, some of the Hot Copper people might say, and I've heard this before, no, they shouldn't capitalize or do a share capitalization because the share price then will just fall all the way back down to where it is now. No, this company is underpinned by the valuation. It is a real company. It has revenue. It is cash flow positive. It is, I think, profitable. Anyway, so when I saw the title of this, I was like, Brookside to pursue US listing? No, stay away from that. Don't focus on that. Too much time and effort put into that. But then, just below that, proposed capital consolidation. So a 1-for-50 ratio. So instead of 4.5 billion shares in issue, now this company is going to have 90 million shares on issue, and the share price, instead of being at 1 cent, it's going to be at 50 cents. So all these pip traders are now gone. They're just gone. They have left the building, which is exactly what we want. And that way, the company can re-rate to a real level, what it should be valued at. Anyway, so in fact, they're going to have 95.45 million shares on issue. And it's subjected to shareholder approval. And I have no doubt some shareholders won't want this, which is crazy. Absolutely crazy. Anyway, and I believe if this does happen, there's a potential share price could actually rally quite nicely. Okay, so let's get to the top 5 stocks of the day. And we'll start with Pilbara. A nice day for Pilbara, a nice day for lithium. Share price up 12.1%. Looks like it was up about 15% at one point a day. Share price high, 277. A couple of interesting things. I saw this in Capital Brief. Lithium stocks rally on EV sales, EU investment. So stocks rallied after the EU signalled increased investment in Australian critical minerals, and as battery electric vehicle sales hit fresh highs in August. But I've been told by everyone that electric vehicles aren't being sold anymore. No one's wanting to buy. But here we have someone saying that electric vehicles have hit a fresh high in August, particularly in China. They're selling like hotcakes in China. So China BEV sales saw the strongest growth, with sales up 21% month on month and 16% over the last 12 months. Even in, Europe? Sales have grown pretty nicely. Global sales of BEVs, which is battery electric vehicles, up 14% in August, representing 10% growth on annual basis. So there's no really no slow in the growth of electric vehicles, even though we've been told by some alarmists, some propagandists that electric vehicles are not wanted anymore by the people. I think that's a flat out lie just based off this. If this is true, which I don't know why would be true. Okay. Although EU looks like it's down. Lithium producers have grappled with softening demand in the battery making material despite a slight recovery in prices since the start of the year. Have they slightly recovered? While the August data shows an improvement in electric vehicle sales globally, year-to-date growth is still lagging growth in lithium supply, while lithium prices remain on the low for this cycle. JP Morgan's Fagan noted prices are resting on a cost curve, but until we see more aggressive supply cuts and or sustained demand acceleration, pricing tension is likely to emerge. Or pricing tension is unlikely, did I say that right? Is unlikely to emerge. We therefore remain cautious on the lithium equities near term. I wouldn't be focusing on any news like this. I'd be focusing on the lithium prices. So I think the lithium market is getting, not the lithium market, but people are getting a little bit too excited about this and would be surprised to see many of these companies pull back after today. Okay, and there was something else here. But interesting enough, market index had a little bit of a different take, didn't they? Lithium stock surge as Chinese giant suspends major mine. I could understand why lithium companies could be surging on this particular news. However, this happened with uranium not that long ago when one of the mines had some bad news, one of the uranium mines. Uranium companies surged in one day, and then the share price, or most of the companies, if not all the uranium companies, fell all the way back over the next few weeks. So even though I can sort of understand why people might be a little bit more excited about this sort of news, I wouldn't get too excited. Anyway, so this is what market index says. CATL's suspension of lithium operations in China has triggered a significant rally in ASX lithium stocks. So we have two different news sources saying two different things. And I think this one is probably more accurate. I can definitely understand this one. With Pilbara Minerals leading gains up to 17%. UBS projects an 8% cut in China's monthly lithium production. And extensive short-selling lithium. They've also, this is a really good point, because Pilbara Minerals is the most shorted company on the ASX. So we could be seeing unwinding of the shorts. Extensive short-selling lithium stocks may be contributing to the sharp rally, with Pilbara Minerals being the most shorted stock on the ASX. Yes, I've just said that. For those who don't know where you get information on this, there's a site called Short Man. It's not, they're not heightists. It's not like short man is a high man or tall man. This is just shorts. And there it is, Pilbara Minerals, by far the most shorted company on the ASX. Just behind Pilbara Minerals, we have IDP Education, Sierra Resources, Lynas Rare Earths, and Liontown Resources. Ceti's there as well. So that's short man. Anyway, so two different versions or insights we have. Who knows who's absolutely right, but we have seen a little bit of a rally in lithium companies today. So let's have a look at the chart for Pilbara Minerals. Is this the time to get excited about this company? Maybe, don't know. If you have a look at the short-term chart, not so much. Share price had fallen a fair bit over the past few weeks, dropping from just above $3 back to about $2.30. So this is a little bounce. This maybe is all it is. It's just a little bounce. Volume has been nice today, but I would not get too excited by this chart just yet. Now, maybe the bottom has been reached, but I'll just say maybe. Not yes, I think the bottom has been reached. Maybe the bottom has been reached, but we just don't know. At this point in time, there's a lot of uncertainties, a lot of unknowns when it comes to lithium and even Pilbara Minerals. So at this point in time, not quite interested, but definitely I am keeping a focus and a lookout on these lithium companies. I do have a watch list, and when I do see a little bit of excitement in the lithium space, if I do see lithium prices rising and I see the charts turning positive, that's, I think, possibly the time to get more excited about lithium companies. But I have no idea when it's going to be. It could be 3 months from now, 6 months, 1 year, 2 years, 3 years, just don't know. So that's Pilbara Minerals, the number 5 stock of the day. Coming in number 4, we have a company called Proteomics International Laboratories. I don't know much about this company. I have seen this company and mentioned a few times. Market cap of this company is, where is it? It's over $100 million. So it's relatively large company. Some other experts might laugh at me saying that, but they think any company below $1 billion is small. If I owned a company that was worth $1 billion, I would not consider it small. In fact, if I owned a company worth $100 million, I would think that's a huge company. If I owned a company that was worth $10 million, wow, that's amazing. Anyway, so Proteomics International Laboratories down 16%. Share price actually has risen from the lows. So the share price would have been down, I'll do very quick maths here, probably would have been down about 22, 23% at the low point today. The low today was 67 cents. Update on commercialization of ProMarker D in the USA. Now, the title of this announcement sometimes probably would not trigger me to open up the announcement. But today we did see a dearth of interesting announcements. So I did open this one up, and it is actually interesting. So they do have, or they did have a license agreement with Sonic Healthcare USA. I'm pretty sure that's probably associated with Sonic Healthcare in New Zealand or Australia. So this is probably a subsidiary of Sonic Healthcare, which is listed on the ASX. Proteomics International has terminated its exclusive license agreement with Sonic Healthcare USA for the use and commercialization of the ProMarker D test in the USA. Something to do with diabetes, if I remember correctly. Not sure what. Anyway, so this means Proteomics is now free to launch ProMarker in the US via licensing to alternative pathology laboratories and service providers, which means they have to hire a lot of sales staff. I do like when a company does get into an agreement with another company to do all the heavy lifting. And this sort of situation, Proteomics finds themselves now in, doesn't always work because you have to spend a fair bit of money. Why did they terminate this? They did mention somewhere here. Yes, so they entered into this agreement in May last year, 10th of May 2023. Under the license agreement, there were milestones and key performance indicators required for commercialization to occur. These certain milestones and key performance indicators have not been met. Shame on you, Sonic Healthcare USA. That's what Proteomics International shareholders are saying right now. And thus, Proteomics International has issued notice of termination under the agreement. The market doesn't like it. Share price has sold off. Let's have a look at the chart. Has the market panicked? Is it overreacting? Interesting. So, I don't know when I look at this company, but I did put a little dash line here, which would have been support at about 72 cents. Where the share price right now? It's at 73 cents. Share price at 67 cents was pretty good buying. Well, maybe not, because if the share price stayed there, that would have been a pretty negative breakdown below this support level. So let's have a look at the weekly chart. I just want to see how long this support level has been in there. In fact, it's been there for a while. It's been there since 2022. So when the share price of this company gets to about 72 cents, we do see a bit of support. Really over the past 3 years, almost 3.5 years, share price really has done nothing for Proteomics. Not even sure if this company has any revenue or any. Let's have a look. Let's have a look at their preliminary fund report. See how much revenue they have. They had $1 million of revenue in the past year, down from the previous year, where they had $1.3 million of revenue. So this is more of a story stock right now. It's very close to not being a story stock, because they have revenue, they have a product they can sell, but they still have to prove that they can sell this in the United States, which can be a hard thing. And now they're doing it alone, probably. I don't know. Maybe they have someone else they have lined up to take control. Don't know. But anyway, chart doesn't look that good. Chart is at a support level, I suppose. So maybe you could take one little positive away from the action today. Proteomics coming in number 4. Oh, it's number 3. We should never ever have regrets when we make decisions. Learn from them. That's fine, but never think, oh, I just wish I bought this company. And I have had thoughts like that, possible thoughts like that, with Callus Metals. They just kept releasing really good announcements. They've released a couple of announcements today. They released an announcement in regards to, well, the title of this is 1 million ounce reserve allows Callus to double production for $31 million. Yeah, so I actually was a little bit confused by the title of that. They also released a presentation, Renewing the Plutonic Gold Belt. So let's open up the one that probably caused a little bit of a run on the share price today. Not much, only up 3%. I was a little bit confused, and I do understand why they put $31 million. That's all they have to spend to double production. So they have to spend $31 million in capital expenditure to double production. I'm not sure if the market expected this. 105% growth in reserves over the last 12 months. So this has been in the pipeline, I suppose. And I think the market probably have anticipated this to happen. And that's just based off what the share price has done today. So not a significant reaction from the market. So they want to double production. Now, the really interesting point here for me, after generating, this is the fourth point, after generating $54 million of free cash flow in financial year 24 with cash and bullion today of $44 million, the catalyst or the company is well placed to fund these plans over the coming 12 to 18 months. So probably definitely don't have to do a capital raising, don't have to do getting loans to fund this. They could just fund this through the cash flow of their current project. This is a great story on the ASX right now. They've also got this 3-year production and cost guidance. And so we're going to see this company really become a really interesting gold play on the ASX over the next few years. If not, it's not there already. If it's not there already. So let's have a look at the chart, and you'll see why, if you haven't looked at this chart, this is an absolutely wonderful chart. Now, this is the weekly chart, and you can see this in the daily chart. Beautiful. This is exactly the sort of chart I'm looking for. And I discovered this one on the 10th of July. Share price on this day rose 23%. So this would have been the Appendix 5B. On that day, share price closed at $1.40. And I was thinking, oh, maybe I should take a position in Catalyst on this day. And I thought, oh, I'll just see how the share price does over the next few days. Share price kept on going higher. I anticipated the share price maybe to drop a little bit or go sideways. It kept going higher, which shows me there's strength in this company. Strength in the announcement. The market is just more and more willing to pay a little bit more of a premium for this company and not a lot of selling. So this is an absolutely wonderful chart, Catalyst Metals. And maybe it's not too late to get in. But I just, patience sometimes can be not a virtue. It can be the opposite of a virtue. It can hold you back. So this is a case of me not really regretting, but maybe learning a lesson. So that's Catalyst Metals. Coming in number 3. Now we have NextDC doing another cover raising. So I'm a shareholder of NextDC. In fact, I'm a shareholder of a few of these companies. I'm not a shareholder of Catalyst. I'm not a shareholder of Pilbara, not a shareholder of Proteomics. Okay, so I'm wrong saying I'm a shareholder of most of these companies. So I'm a shareholder of NextDC and also the company coming in number 1. And this company just keeps on doing capital raisings. I'm like, oh, I understand why they're doing it. So a capital raising for further Asian expansion. This is a case where I just wish they were generating enough cash flow that they can use the cash flow in the business to expand the company. That's the way a business should work. You generate growth through the cash you generate in the business. NextDC hasn't got to that point just yet. So to expand, they need to do capital raising. So the shares on issue keep on increasing. So this is, without doubt, share dilutive to shareholders. It's dilutive to shareholders, without a doubt. And I just wish, just hang on, become cash flow positive, that sort of thing first. But also in the back of my mind, I understand this is sort of like a land grab. Data centers is a land grab. You want to get, or these companies want to get as many data centers out there as possible. And that's probably what is in the mind of NextDC and their management. So a $550 million placement. I don't think this placement was that much of a discount. $17.15. So share price is significantly below the capital raising price. So not a big of a discount. So I'm a little bit surprised the share price has sold off, but I think possibly there's other shareholders getting a little bit fed up with the amount of capital raisings done. Maybe they're a little bit upset that this is just a placement and shareholders, no. I was going to say maybe shareholders, that they are doing a share purchase plan, an SPP. I thought maybe this was just a placement, but no. So I'll talk about the share placement purchase plan in a second. So I thought maybe the shareholders are going to get upset about that. But the very fact that this capital raising is done at $17.15, not much of a discount, like 3.9% discount to the last close. Now the share price is significantly below $17.15. And if this share purchase plan is at the same price, which there's no reason it wouldn't, why would you be buying shares in this purchase plan? Why would you be participating? You can buy shares now at a lower price. Yeah. Anyway, so the market doesn't like this. The market doesn't like this. So this is expanding into Asia. They talked about it in the 21-page document. They talk about why or what they're going to do. So received from the capital raising are intended to be applied to the acquisition of new data center development sites in Asia, as well as general corporate purposes and transaction costs. But they did mention some locations somewhere. I went through it pretty quickly. Here we go. So Bangkok and Johor, Malaysia. So Thailand and Malaysia. Pretty sure they have something in the works in Japan, maybe Tokyo. So I do think this is, here we go. Yeah, here's their sort of map. So Tokyo. Don't know why Guam's in there. I did forecasts for Guam once. I used to work in Tokyo, and some of the forecasts I did were for, of course, Japan, Korea, China, India, Russia, and I did also a forecast for Guam. Not a public forecast, an aviation forecast, which is a little bit different. Quite a bit different, actually. Also Bangkok, Malaysia, and also Singapore. So they are expanding overseas. So they probably do, and also Auckland. Probably should not forget Auckland. And market doesn't like it. Market says, oh, why? Why are you doing another capital raising? Wasn't that long ago you did another capital raising? In fact, is there a site where we can see all the times a company has done a capital raising? So here, April 2024, $1.3 billion capital raising. That's probably the last one I remember. So April and now September, 5 months apart, exactly 5 months apart. We're there. 4, yep, exactly 5 months apart. We've done 2 capital raisings. And I wouldn't be surprised to find or discover that there's quite a few shareholders getting a little bit grievous that they're doing so many capital raisings. 2 in 5 months is maybe a little bit too much. And that's one of the reasons why the share price is just all over the place. Now, the last time they did a capital raising was just after the share price rose a fair bit on the results in February. So I assume, yeah, the share price dropped on the 15th of April. Share price dropped 4% on that capital raising. And the share price is now higher than it was back then. But yeah, it's just share price is all over the place. Now, that's NextDC. I was going to say that's capital raising. But that was NextDC. Now, onto the stock of the day. It's MinRes. MinRes, up 16.21%. Now, I don't think many shareholders will be dancing in the streets at all, because if you have a look at the trade history for MinRes, red, 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 red. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days down in a row. 10 days down in a row. Share price dropped. The last time there was a green day, share price closed at $45.60. So share price dropped from $45 down to $30 in 10 trading days. That's a decrease of 33%. And the chart looks absolutely ugly. So what has happened to MinRes today? They are doing cost cutting. They've also sold something. Some interesting things in here. So they sold a business, was it an iron ore hauling business or something like that? They have sold, where is it? Onslow Iron Haul Road to investment funds managed by Morgan Stanley Infrastructure Partners for total expected proceeds of $1.3 billion. That's a lot of bickies. That's a lot of money. MinRes will receive upfront cash consideration of $1.1 billion. And upon receipt of the $1.1 billion, the company's $750 million US undrawn bridge facility will be cancelled. So I don't mind that. Now, I don't know much about this iron haul road business. How much cash flow does it generate for MinRes? But was this necessary, or was this strategic play? Was this a desperate play? I would like this much less if it was a desperate play. They had to do it. If they had to do it, and this was a really good quality asset, I would not be a fan. But I'm not I don't have that sort of knowledge around MinRes just now, or that in-depth knowledge of the company. Anyway, something else they talked about in here, which I did find intriguing, The other thing I should mention is their MinRes operations at Onslow Iron will be cash flow positive from October 2024 at current iron ore prices. Okay, so keep that in mind as well. Now, the other interesting thing here is they're doing cost cutting. So $180 million of financial year 25 capital expenditure savings and $120 million of financial year 25 operational cost savings have been identified, including the lithium division. So they are now saving money. So obviously this company, the management went, ooh, things are not going well for the company right now because lithium, iron ore, both of those prices are going down. Their mining services division is doing fine. It's fine. But this company is reliant now on iron ore and lithium. They need to diversify a little bit more. I actually would. I'm going to say I believe it was a mistake getting into the mining industry. They should have remained a mining services and maybe diversified in different ways. Anyway, they also mentioned here cost savings in lithium include this is what I found the most fascinating because I have no idea what it means, including a reduction to operational headcount by transitioning to a 2 weeks on, 1 week off roster from 2 weeks on, 2 weeks off roster. Now, I don't know the difference between 2 weeks on, 1 week off from a 2 weeks on, 2 weeks off roster. It seems like in that 2 weeks on, do you work more and then only have 1 week off? Do our workers going to work more because you're saying you're reducing operational headcount, which implies if you're doing the same amount of work, you'll be working more, or each worker will be working more, but for less time off. I'm not sure how this is working. If I was an employee of this lithium division and I had to work 2 weeks in the mine and have 1 week off when in the past it was 2 weeks on, 2 weeks off, I would be pissed off. Anyway, so that's what happens when companies are under stress. One of the first things to go is worker rights and stuff like this. So not a surprise at all. Anyway, if you do know a little bit more about 2 weeks on, or the difference between 2 weeks on, 1 week off versus 2 weeks on, 2 weeks off. In fact, I'm going to say if you have a 2 weeks on, 2 weeks off, that 2 weeks on, you're doing way more work because you get that 2 weeks off. So 2 weeks on, 1 week off, you're doing less work in that 2 weeks on and only get 1 week off. I'm not sure where the savings are in this. I don't know. So yeah, anyway, maybe I'm just stupid, which is a possibility. Anyway, that's it for today. No comments, no more charts. I've gone on long enough. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.